Is it true that the trade deficit with China is inherently bad and responsible for destroying American blue-collar jobs?
This idea has been prominently advanced by figures like Republican Senator Josh Hawley, who argues that every dollar of that deficit represents jobs lost.
But how accurate is this claim? First, let's define the trade deficit.
It's the gap between what the U.S. imports from the rest of the world and what it exports.
When we talk about a trade deficit with China, we mean that the U.S. buys more goods from China than it sells to China. This is often portrayed as a negative thing, but the reality is more complex. The trade deficit is not the result of so-called unfair trade deals. Instead, it reflects broader economic trends, including consumer preferences and investment flows. For instance, many American consumers prefer to buy cheaper electronics, clothing, and toys that are often produced more cost-effectively in China. This consumer behavior drives the demand for imports, contributing to the trade deficit. One important factor to consider is that the U.S. has been running trade deficits since the 1970s. During this time, the American economy has grown significantly. This happened by borrowing from overseas to invest in both consumption and production. For example, the tech boom of the 1990s was partially financed by foreign investments, leading to innovations and economic expansion. Debt can be used to fund investments that boost future productivity and economic growth. So, when the U.S. runs a trade deficit, it's often borrowing to invest in its future. Critics often argue that the trade deficit destroys American jobs, particularly in manufacturing. While it's true that some jobs are lost due to competition with imports, the overall impact on the economy is more nuanced. Trade deficits can lead to lower prices for consumers and more efficient resource allocation, which benefits the economy as a whole. For example, cheaper imported goods can increase the purchasing power of American consumers, allowing them to spend more on other goods and services, thereby supporting jobs in those sectors. Additionally, companies like Apple and Walmart benefit from importing goods from China, enabling them to offer a wider range of products at lower prices, which can lead to higher sales and more employment opportunities within the U.S. So, when we hear alarming statements about the trade deficit with China, it's important to consider the broader context. The trade deficit reflects complex economic dynamics, including investment patterns and consumer behavior. It's not simply a matter of jobs being lost or wealth being drained from the country. Instead, it's a part of a larger economic picture that includes growth, investment, and consumer benefits.